In this video, I will show you how to use a range trading strategy. I will also give you live trading examples with the strategy. So hopefully you guys can appreciate the effort. And without further ado, let's get down to business. Okay, so trading the range in the market is super important and can be very profitable if done right. First example, let's say we find a trend towards the upside. Now we need to draw yet another line above the candlesticks. This will shape our trend nicely. And as you can see, the market is currently pushing up and pulls back down, pushes up, pushes back down. And the same move is repeated numerous times throughout this upwards trending channel. Now, every time this initial move goes towards the upside, it's called a new higher high because it's broken these area zones. And the pullback is usually a higher low because it pulled back towards this area zone. The same thing goes over here, a new higher high because it broke this previous high, pulls back, and it's a new higher low because this was the previous low. And it just goes like this: new higher high, broken here, higher low because it's broken this area zone. So not only we have sideways channels, we also have horizontal channels, as it's called a consolidation. As you can see, a nice area of support and a nice area of resistance. So in this area it's a resistance, in this area it's a support, and the same concept is applied as the upwards trending channel is going up, resistance, goes down, support. There's no higher highs and higher lows in the sideways market. There's just support and resistance. Now, as you can see, I placed a buy trade on USD CAD 5 lot size trade, and it's currently on $1,400 in profit, which is definitely great. But what we used is literally the same technique I just showed you with a few indicators. The 25 and 50 moving averages, both are showing me the upwards direction. All the candlesticks are trading above the moving averages, which shows bullish pressure, and it means the market is currently hawkish. There's also an area of sensitivity. We could have potentially did it like this, but I thought because it formed a new area of support over here, that could be a good trade to enter, and I did. And since it's trending towards the upside, as you can see on the 1 hourly time frame and the 4 hourly time frame as well, look at where the moving averages are at, I knew it probably will be a good trade to long this position, and it worked out nicely. So I have this trade open. I was nearly at take profit. Now it's pulling back a little bit, which is totally fine. Very likely it's going to pull back towards this area zone before it continues to move up, and we will probably get our first take profit of the day, which is definitely nice. Now obviously I use this strategy for swing trading, so I'm going to show you on the lower time frames with some scalping trades. Can you use this technique, whether it works, and what indicators you should use to benefit from this range trading strategy. So let's begin. All right, so we're on the 5-minute time frame on Euro GBP currency pair. So let's just identify our area of resistance and area of support or recent support. As you can see, the market has pushed down, had an exhaustion, and then started to consolidate. As I said, resistance and support in these two areas, right? Now, as you can see, if we drag this along, we're currently having a nice push exhaustion scenario, right? Push with a bearish engulfing candlestick, following yet another one over here, now having an exhaustion towards the previous area of sensitivity, which is likely this area zone or the 25 and 50 moving averages. So definitely a good trading opportunity to enter now, because usually our entry signal is a bearish engulfing candle, right? So we could have entered here, but what happens if you don't and the market continues to pull up a little bit? Well, you just find new areas of resistance, let's say the moving averages or this area zone. It looks great for a pullback trade towards the downside. When I look at the 15-minute time frame, same thing. It's just an exhaustion phase. So after the exhaustion, we can definitely trade towards the downside, right? So this is Euro GBP 5 minutes. Let's do a nice big lot size trade, 7.5, and click OK. And I do believe this trade will be successful because look, two bearish engulfing candles. These are your confirmations. You could have potentially entered here, but why you don't enter on a breakout? Because a pullback happens. You always enter on exhaustion, right? So push, you don't enter here. Usually you could have, because it's a nice, bearish engulfing candle after another one. but you enter on exhaustion. Exhaustion happens in the previous area of sensitivity, so the support over here has now become resistance. So support becomes resistance in this area zone. Plus we have the 25 and 50 moving averages acting as a resistance for the candlesticks to push the market towards the downside. And that's what we are seeing currently. Bearish engulfing candle forming on the 5 minutes. I definitely expect this trade to push towards the downside even more, to retest this area zone, and once it breaks this area of support, it becomes resistance once again over here. Then we will see another push towards the downside for a new lower low, and the higher highs and lower lows are basically the same thing, just the opposite direction. So if it's trending down, lower low, trending up, higher high. You get it. So what I also want to mention is if the market will now close as a bearish engulfing candle after a pullback. As I said, push, exhaustion, and this confirms the exhaustion has finished with the bearish engulfing candle. You probably want to enter yet again if this does happen, because push, exhaustion with the bearish engulfing candle is your confirmation to enter the trade once again. Yes, we did enter a little bit prematurely, but as I said, the moving averages is your resistance, so it's a good enough trading opportunity. But this is pretty much perfect if it closes in the next 45 seconds. So if we're gonna see a bearish engulfing candle close, we will place yet another trade on Euro GBP and we will see how this trade goes. Right, so 5 4 3 2 1. Okay, new candlestick has formed. We can definitely enter a new trade, lower our lot size a little bit and place a short position. I don't have any take profits or stop loss because I'm scalping, I'm active in the markets. Obviously this wasn't a scalp trade, so I swing traded. I wasn't watching the markets all night, right? So I had to put stop loss and take profit just in case it dips. But if you're actively trading, I believe you can definitely trade without stop loss or any take profit. So as you can see, it's shooting towards the downside nicely. It's probably going to retest its previous low. Hopefully it breaks past it. We're going to get a new low and then push exhaustion, push scenario towards the downside. Simple as that. But what you want to use also is different time frames. So we could use the 1 minute time frame. And as you can see, the 1 minute time frame has recently crossed the 25 and 50 moving averages over here and gave us a bearish engulfing candle over here, which just shows and confirms more bearish pressure and momentum, and likely this trade will continue to move towards the downside, towards this previous area level before it touches this and then continues to move down. You also may want to use indicators, so I love using RSI to see where we at. As you can see, the market is dipped a little bit below the 50% line, but that's okay. It's not oversold yet, so that's a good indication for us to carry on selling. Once it is oversold, you will likely see a pullback. Let's say if it comes back down here, it might be exhausted. We might see a pullback and then continue to move down. That's what usually happens with RSI. But if you really want to get accurate results, you might want to use RSI indicator on, let's say, the 4-hourly time frame to see what's going on. So the 4-hourly actually is trending towards the upside, but if we have a look at the 1-hourly, as you can see, trending down. Daily is trending down with a bearish engulfing candle. It's kind of like a seesaw. You need to weight your advantages and disadvantages. So we are seeing hourly push towards the downside, daily push towards the downside. However, 4-hourly has, moving averages on its side. RSI is in the middle at the moment, so it's not telling me it's oversold. That's pretty damn good for me, right? So I believe that the daily direction is much stronger, and the 1-hourly is an active time frame, of course, and we can definitely bet our trades on. 5 minutes, as you can see, bearish engulfing candles, yet another one over here, nearly retesting the zone. As I said, I'm not surprised at all that this is happening, which is great. Let's have a look at our trades. So 200. Okay, so all 3 trades are currently in profit. Very likely it's going to pull back now since it's retesting its previous low. This is acting now as a new supported area, as you can see over here. So if you don't know what's gonna happen, usually it's easy to identify a range when it's already happened, right? But when it's not happened, you can see the range is still there, right? This is the support, and this is likely the new area of resistance over here. So if we just draw that, as you can see, this makes sense now, right? New area resistance, new area of support, bearish engulfing candle, moving averages are acting as a resistance zone for this trade. RSI hasn't pulled back too bad at the moment, and the 4 hourly RSI was in the middle as well, so it's pretty damn good. We can also see what the markets are saying, and on October 26th, as you can see, Euro British Pound has been selling off. So this means that Euro is being sold off against the Great British Pound, which is great news for us because we are short in the trade. We wanted to go down, and this is great news. As you can see, it was positive last week, minus this week, which is great. That's what we want. We can also use the currency strength meter. As you can see, GBP is positive, euro is negative, which means very likely the currency strength will continue to move down. We can even have a look at the time interval of 1 year, and we can see that CAD, US dollar, and GBP are top 3 currency pairs that are performing well this year, and euro is pretty much at the bottom, which is likely going to cause a crash towards the downside, and the overall trend will continue to move down. As you can see, a nice push scenario, 30 seconds left until new candlestick closes. If it's going to close lower than the previous low, it's great. It's broken area of sensitivity, and it's a push exhaustion push scenario. That's what I'm expecting, and pretty much that's what I'm seeing at the moment. So 7 seconds left until this candlestick closes. Let's just see how it does. And yet the market managed to close over here just below this area low, which shows a further bearish pressure and momentum. And as you can see, it's currently breaking our supported zone. So push exhaustion push scenario, very likely. I know I keep saying it, but that's what I'm seeing, and that's what you guys should learn. It doesn't have to be complicated to make money on Forex. Trust me, I've been doing this for over 10 years. And as you can see, our results are definitely doing great. $600 in profit, $200, and $900 in profit, which is great. Pushing down nicely over here, Euro GBP, and very likely it's going to have an exhaustion. So it's nearly reaching the RSI level, so I'm gonna actually close off this trade. So if you enjoy my live trading videos, make sure to watch this one because it's really good.